Well, thanks for tuning in to Talking Point today. The increased equity participation by retail investors and maybe even institutional investors alike is the talk of town the last 1 month, isn't it? The volumes have gone not literally through the roof, but have certainly increased quite by multiple levels. And the number of clients and the number of accounts that have opened up as well have certainly increased. Now, the question is, uh, the skeptics argue that most of the times when equity markets see a bit of an increase in flavor and participation, there is a temporary upsurge after which it dies down. The question is, can this time be for real? Is this time indeed different? And even if it is not, how sustainable is this momentum that we've gotten? And what could it mean for the business of broking companies? Now, there are, as all of us know, and as all of us love to describe, there are two distinct types of brokers, right? I mean, uh, or maybe three distinct types of brokers. One is brokers which are largely institutional led, and there the activity may not be as buoyant compared to the base as compared to the retail focused brokers and even discount brokers. So we thought it's best to understand the models and the revenue streams and the outlook ahead for business from two brokerages which have a very large retail participation as well. So joining us now to talk about that particular thing is Prakarsh Gagdani. He's CEO of 5paisa.com, and Ajay Menon, MD and CEO of the broking and the distribution business of Motilal Oswal Financial Services. Gentlemen, both of you, good morning and thanks so much for taking the time out and speaking to us out here at Talking Point. Prakash, let's start off this conversation.
Morning, Niraj.
A very good morning. Let's start this conversation with you. Before I can actually get to how business would look, just a quick follow up. I think there's this SEBI circular which speaks about postponing the upfront collection of margins from clients until December. Is that a big shot in the arm?
I think it's, I won't say it is a big shot in the arm. It is just an extension of 4 months, and that's probably given for brokers and exchanges to keep their infrastructure ready so that the reporting happens, on time and the way regulator wants. I think it's an extension, but I think it's written on the wall that the leverage market is, not here to stay, and the people, customers and brokers will have to put more money to trade in intraday, especially in derivative segment. So I think it's more of an extension, nothing more.
Okay. So let's assume that, therefore, that might not be as big a deal. But great. Let's start off with the conversation. Prakash, to you, and then I'll come to Ajay as well, about how has been the experience over the last 3 odd months in terms of business activity moving up, in terms of customer acquisition, in terms of participation on the platform.
Yeah. So it's now a public knowledge that the last 4 months have been euphoria in stock markets, and unlike what's happening in the other part of the world where everything looks to be doomed, it's pessimism and there are a lot of issues on the economy. But on the stock market side, it's been a euphoria. But see, this euphoria did not start when the market started going up. It actually started when the markets were down. So basically, this euphoria started in the month of March. And that was the time when the stock markets were down, the prices were almost 40-50% down. And that's when the retail participation started. And this is the first time it is happening when the retail started participating when the markets are down. But having said that, what happens is that then it's followed up with a phenomenal rally on the stock prices. And when the stock prices rally, I mean, and especially mid caps and small caps, and that's retail's darling. So retail definitely, hops on and tries to take the advantage. So it's been a phenomenal run, both in terms of customer acquisition, revenue. We are seeing a huge retail participation across the spectrum, and mostly from the people who are coming for the capital market for the first time. And that's a very good sign, I guess.
Actually, that's the turning point, right? The number of the first timers. I mean, it's popularly called as the Robinhood phenomenon for a lot of people.
Yeah.
But yeah, what Robinhood has seen in the US, I think our brokerages out here are seeing that in India as well. Ajay, how has it been for you? Because I mean, you've been around for a while, and how has this period been for you? And then, of course, we'll try and compare this. Viewers, this is what we'll do. We've gotten the initial thoughts from both our guests. Then we'll try and compare it to the past, and then we'll talk about how sustainable this is. Ajay, thoughts from you?
So, good morning, Niraj. Nice to be here. Say for us, the participation but natural has been all-time high. We have got a good participation across our active clients as well as new clients coming into the market. The best part is that we see that the value add which we offer in terms of research and advice is now what the client requires on the stage when you are looking at such kind of volatile markets. So at the end of the day, there is a overall participation which has improved. I think it's mainly because of the lockdown. People are free; they have got nothing much to do, and that time the number of participants are increased. And this is somewhere it's a momentum-driven trading which people are looking at. And looking at global markets, the way it has gone, India is surely still not caught up to the levels what the global markets are. So there is still headroom to cover if that is the way to look at it. Although we all know that economy will take a time to streamline in this post-COVID era, but people look at the positive side that the worst is over and the best is still to come. And at the same time, there is a lot of other industries are going through rough times, so people are into trying to get some momentum from the markets. And as you know, when small caps and mid caps rally happen, the retail participation surely comes in a big way. At the same time, I can see that the participation in mutual fund has got reduced. So that has also got its own impact on broking. So people are shifting their mutual funds to direct broking because they have not seen the returns in the last 3 years investing into mutual funds.
Yeah, that's true. Actually, it's a pertinent one quick follow-up, Ajay, on that. You mentioned that, and to an extent, it's true because when I speak to my cousins, they tell me the same thing, right? That घर पे बैठे हैं कुछ है नहीं, so we are looking at the markets right now. Let's have an alternate source of revenue as well. Therefore, is there a fear that while this participation has moved up, some of these activities, even if they don't become dormant in a lot of accounts, could actually scale down considerably once the lockdowns in the truest sense open up and people resume work and therefore don't have the time to follow this as actively as they're doing right now?
See, I think it will be two ways. One is that there will surely be some impact when the things open up and people are busy in their own businesses. But at the same time, the number of new participants coming into the market and the moment they get a feel of this market, it is not so easy to leave this market. People who are into stock markets always be in stock markets. So the good part is that people would like to see how their portfolios are doing. And at the same time, with online, the volume is shifting onto online in a big way. Everything is available on the mobile app. People are more easy to trade wherever they are at whatever point they want to do. And at our end, we also have the advisor to talk to them. So we surely get the benefit of both the advisory presence to take care of their requirements. At the same time, they can do it on their own. We call it the phygital model, the physical as well as the digital.
Yeah, the physical as well as the digital model. But you have to admit that the digital model is really taken up by stream. Prakarsh, we did a story last week wherein we got the data from the NSE as well, which suggested that 23% of the overall trading that has happened in the month of June was via the use of this cell phone. I mean, that would suggest that people are doing the self assessment and self trading, etc., etc. And I think I was speaking to one of your peers, if I can call them that, which is Upstocks or RKSV Securities, and they in that story suggested that a large proportion of the clients that they have added is from tier 2 and tier 3 cities, which suggests, as Ajay was probably saying, first timers. What has been the experience on your platform?
For us, mobile was the way to go from the day we started. So from the first day till now, almost 80% of our turnover, even today, with almost 35,000 crore turnover that we do on a daily basis, happens on the mobile app. Not even a mobile app, mobile website, but it happens on mobile app. So for an industry, 23%, it is a long way to go. And as you said, see, right now, it's all mobile. Everyone wants to do it, themselves. And especially even for us, and all the time we've been acquiring customers from tier 2, tier 3 and beyond. Our maximum customers come outside 50 cities, the top 50 cities of India. So when you go to that level of penetration, what infrastructure they have a smartphone and they have an internet connection, and they have less of opportunity in terms of banks and all other people to open account. And that's when they come on mobile, they search, and then they download the app and they start trading. And for them, that's the world. And I think it's just a start. I mean, the way it happened earlier, that the entire from physical calling RMs and doing trading, it moved to online trading, where customers were logging on to their website and trading. Now it is going to be mobile. So I think 23% is from my side, it would be a lesser number because we're already doing 80% there. So it's only a way upwards.
Interesting. Prakash, the other question that I have is this growth in active clients, right? Now, when I looked at this data, and I mean, we might be off here and there, but I think our data seems to suggest that, or a YOY basis, the YOY growth for June 2020 or June 2019 for you is about 280%. Now, my
Yeah.
question is, assuming that this number is correct, is this all organic, or did you have to do some other means in terms of discounts or freebies given for onboarding people? And therefore, is the is the rise in business income
Yeah.
commensurate with the rise in clients that you've onboarded? Because it's a very hefty number.
Correct, correct. So, we have been definitely, we have our spends on marketing, and we do our campaigns digitally. So that's the only way we approach our customers digitally. But over a period of time, what has happened is that the share of organic referrals that has gone up. So the way we acquire customers, they spread a word of mouth, and then we get more customers. So that has really played. Now, if you see our year-on-year comparison, our revenues, our top line went up by almost 85% over the year, and our customer acquisition also went up by almost 171%. So obviously, when you add these kind of numbers, somewhere the quality goes down, but then we are able to get the revenue out of these customers. So I see that the revenue is somewhere in tandem with the customer acquisition growth that we see. So though we don't charge people for opening an account, but it's pure organic trading after that, because we do not have any relationship managers. We don't call customers. So what they do is on their own.
Yeah, that's true. So, Prakash, just a quick follow up, and then I'll ask Ajay the same set of questions. But just a quick follow up: how would the revenue pie be different for, say, a company like you versus one a traditional broker? And what would the run rate of growth be? Let's assume that you keep up not necessarily the same pace or the same percentage of addition, but a healthy number of customer additions over the course of the next couple of quarters as well, if the rally stays true, inshallah. What
Yeah.
happens then, therefore, to the way the revenue pie would change? Would it multiply with a force effect, or would it come off because there will be a law of averages that comes in? How does it happen?
See, first of all, in terms of revenues, obviously the full service brokers will have a higher revenue on a per volume basis. At least it will be 4 times higher than 4 to 5 times higher than what we make. So definitely they have a advantage in terms of volumes. But what happens is that when we acquire customer in whatever scale that we do, beyond level, we start getting an operating leverage. And whenever a customer trades on its own, it is never a very heightened activity and up and down, because it is not forced. So it's more of a linear activity. People may reduce the number of trades over a period of time, but they don't go out. They do on their own. Secondly, when they do themselves, they don't burn out much. So the longevity of their investments, and when they start making a bit of money, then they come with more money. So when you do online, the longevity of a customer is more, and then you start getting the operating leverage in terms of more and more people trading. So though on a per customer basis, the revenue for a full service broker will be higher than a small from a discount broker, but then over a period of time, because of longevity of a customer, definitely the revenues will multiply there.
Okay, and the second part of my question, Prakash, was how would this shape up over the course of the next couple of quarters if this indeed stays up? I mean, does the revenue multiplication happen with the same force as the customer acquisition?
Yes. So, the way in terms of the growth that we are seeing month on month in terms of acquisition, it will be a bit difficult to actually pinpoint that the same quality of customers will come. As I see right now, I see that the quality that we acquired 4 5 months back, and now despite double the numbers, is almost the same. So I hope that the revenue growth will continue the same way it did for us for last 2 3 quarters.
Okay, but difficult to predict that in a particular fashion.
Absolutely.
Fair call.
And one important factor why it is difficult to predict is also markets. When markets are going up 40% in a quarter, I mean everything looks rosy, and suddenly there's a GDP number which comes and we says that it's not that good that we anticipated. Suddenly stock market prices go down. So the market, the mother factor of market is a huge an important part to play in this entire revenue stream.
That's true. I saw Ajay smiling at that, and I'm sure he concurs there. But by the way,
Yeah.
viewers, just remember, this is not a conversation about whether the discount broking business is better versus a full service business is better or not. This is about the whole broking space at large, and how would that benefit as a result of this uptick or the upsurge in participation that we're seeing. So, Ajay, now similar questions to you. To your mind, how is this spate of number of customers coming up and trading via your platform different than what you've seen in the past? If yes, then why? If no, then why? And what is your sense of the predictability of the revenue stream for a broking business like yours over the course of the next couple of quarters, keeping in mind the factor of Mr. Market?
Yeah, so as I told you that the number of participants in the market has grown in a big way. We are at all-time high numbers overall. The good thing which has happened in this COVID situation, as I told you, that people are free and they've got nothing else to do. In our franchisee, which is one of our biggest segments, we did not have much of online, but this market has ensured that the trading volumes going online through the mobile, through our franchise segment has also gone to the roof. So automatically the participation has increased overall by the clients doing trades online and at the same time getting in touch with our advisory base. So in that way, this volume is much better for us because the online volume is here to stay. And we feel that people once getting used to the mobile will be continue to do that. To continue doing the mobile. Now, coming to whether this is sustainable, let me put it that way. Now, this is a momentum-driven rally. People are looking at global markets. People are looking at what is going to happen. And one thing is sure, I think the volatility is here to continue. And trading volumes always bees up when there is volatility. So that is one thing which I feel will help us maintain this volume, if not grow. Second thing, is that when you look at the small cap, mid cap rally, now this has gone to the roof. Now, will this sustain? Will this continue? That has to be seen. As you said, the market is the third, has to decide that. More importantly, FIIs still not entered the markets. They are still on the sidelines. So what happens if the FIIs comes into the market? I think it can only go up if they enter the market at these levels, feeling left out. And the global rally is here to stay. That's what I understand. So there are more reasons for market to continue to be volatile, which I think will help the trading volumes in an overall basis, and that will ensure that we continue to grow or at least maintain the levels which we are doing in the last 3-4 months.
So what happens to the different heads of revenue streams, Ajay, for you as a broker? There's also this whole conversation about how with the number of IPOs moving up over the course of the next 6 to 9 odd months and the divestment process being very active too, there could be substantial uptick in participation too. So how would your heads of revenue within the broking business change, if at all, over the course of the next 6 to 9 months from what they are right now?
Right. So, as you know, we are a full service broker and we get the benefit once a client get enrolled for broking, we sell them multiple products, whether it's SIP, whether it's mutual funds, whether it is high ticket PMS. So, as you know that the broking has been the focus in the last quarter. But
Yes.
when you look at long-term investments, when you look at much longer horizon from a fundamental perspective, the mutual funds and the PMS should follow suit. It's just a matter of time. So we are always ready to capture that market when it's ready, and people are willing to invest there. So we have got multiple streams to get the revenue from the same customer. So that is one way good. And the second point which you talked about, the IPOs. IPO surely is a place where retail participation comes into picture. Just last week we had 2 IPOs coming in, one FPO and one IPO. So automatically the retail participation starts increasing when there is IPO, and I think that will only help in the overall scheme of things.
Okay. Final question, Prakash, to you, and that is again, I'm just trying to understand from a perspective of a person who's running his business about the visibility of this. Now, I agree that it depends on Mr. Market and what will happen, etc., etc. But as a business, you are surely not just subjecting yourself to the vagaries of what market does, right? You're probably trying to build streams which will sustain in the normal fashion and then add on a few pieces here and there in order to have the YY growth. So what, to your mind, is a 2-year, 3-year view here? Do you reckon that there could be multiple streams of revenue for brokerage businesses, and maybe the subdued valuations were one reason why people are logging in lock, stock, barrel into these businesses now.
No, as I said, even if even if the activity is good regulated markets, but even so, for example, if you see our last 3 years growth, we've been growing despite markets not growing at all. So the one thing is very clear, that this business is here to stay, and it is here to grow phenomenally. So if I look at in next 2 to 3 years of a scenario, definitely the broking business, and especially the discount broking business, will stand on its feet, will have its revenue, and as we go ahead, it will also be added by some extra revenue streams. Though as a digital player, we will see that how these extra revenue streams fit into our scheme of things, because we want to have no physical leg and no paperwork, so it has to be all digital. But yes, definitely there will be more revenue streams coming in, and this model has to be sustained. I mean, we all know that broking is a cyclical business. Stock markets run in spurts, and it is not linear. So there'll always be 1 year of good growth and 2 3 years of average growth. So our business is aligned, especially our cost structures are aligned to that kind of business, which helps us grow at the same time, try and maintain the profitability.
Non-stocks, Prakarsh, is there increased inquiry, or is there an ask for other products as well? Because I mean, excuse me for not knowing, but some of your peers are giving these options of international investing. Mutual funds, of course, is a very common thing. What is it that you are thinking of? What is it that you've already added? What is it that could come on board? Because I can understand a full stream
Yeah,
broker would have all of these services anyways present. I'm trying to
correct.
understand from a discount brokers or typically an online model, what can happen, what is already happening.
So we do equities. I mean, obviously the stock markets and plus your mutual funds, that's there. But sometime back we launched our digital gold, so that has taken off well. And thanks to the prices of gold going up from almost 40,000 to now almost touching 50,000. So I think that is playing also in people buying digital gold, and one of the extra asset they have along with equities. We also, we just commenced our peer-to-peer lending platform, and that's a very exciting space. We are now an NBFC, a P2P NBFC. We just commenced our operation, and that I feel is going to be a revenue driver for us in coming quarters. We are also going to very soon launch international broking for our customers. So these are few projects that we are currently working on.
Okay, great. Well, gentlemen, I wish both of you and your teams, of course, a very safe next 6 months, but also a very profitable next 6 months, as a new set of investors have come in. So all the best, and thank you so much for joining in today on this conversation.
Thank you, Neeraj.
Thank
Thanks
you.
a lot.
Thanks, Niraj, for having us. Thank
The
you.
pleasure was ours. And viewers, I hope this conversation gave you some insights about the bullishness and the confidence that the broking services business owners have in their business. Let's see how the next 6 months shape up for these businesses and for markets as well. Thanks so much for tuning into the Talking Point today.